Yeah, I sent the message.
Welcome back, Market Mastery, the 1 hour you need to make sense of the market. We have some big tech earnings coming up. We have the SPY playing out as it always does, right into our hands, both bull and bear. We are giving you the exact entries, exits, risk thesis, and the why. And we are working on real-time updates as well for this, which I think will completely change the game for us as a group. So I'm going to get this up here. You've already got these on here. When are these from?
Oh, no, I was making a video how to do it. Like a walkthrough, how to do SPY options.
I'm just going to go over to
just a
different version.
Just delete it. I don't need it anymore.
No, it's all right. We can just go to a clean one here.
Someone was showing me a different SPY chart, too. That was the options were cheaper. I think
was it SPX?
No. It was SPY, XSP, mini SPX. Yeah, XSP.
Oh, the E-mini?
Yeah, mini SPX index.
Oh, that's some good stuff. That's futures.
Have you ever traded that? I mean,
no.
Liquidity seems all right.
I've never gotten into futures. I've been told by everyone on earth that I should because it's like exactly how I trade, but I just never have. It's a journey we venture on one of these days. But we do have the SPY up here. I mean, we are pushing again to try and test all-time highs. This is on the daily chart. Unbelievable moves. Like, I cannot believe this thing is still going up. It's just absolutely mind-blowing. And I would say that these levels are getting even more ridiculous now that we're starting to get some confluence on them, meaning they've touched multiple times to create a better understanding of where this chart can go. And as of right now, we really have three key ones that are identified in the current landscape. Those being 673 and 673.6, 683.5, and 695.5. Those are going to be kind of the three main levels. Now, keep in mind, for SPY Playmaker, we break down the exact options contract, exactly how we're trading it, and the exact levels, and then we give all that to you in a well put together email so you understand exactly how to trade it. So go ahead and tag up in the chat. You know, we got 20, 30 people in here. Say what's up. If you're from the Discord, just drop your username so we know who's here. Let's drop some names, see who we got with us before we get into this. I'm going to boost this. I'm going to boost this here. Damn, Palantir earnings. Are those today?
It was already, yeah.
Oh, my God. What happened?
Well, okay, I did a report. Okay, this is ChatGPT, but I put the earnings, the presentation, and a letter from Alex Karp in there. Okay. Now, I have okay, I don't know if I should say this on stream, but I do have a GPT trained by Shai. Well, myself, about how Shai sees things. And well, this one says it wasn't a beat. It's proven of an S curve in the one segment that matters most for upside, U.S. commercial. When a company posts 130% year-over-year U.S. commercial growth, while also throwing off 56% adjusted FCF margin, which I don't even know what that means, and 127% rule of 40. That's not AI hype. That's operating leverage and real demand. All right, let's look at the real numbers, though.
Yeah.
I mean, check out if we're going to Palantir, look at the chart. What do you see on it right now?
Pull it up right now.
What was the price you were looking at? 145.
It just hit 147.
That's a day. Look at the 4 hours. But the 4 hours right there.
That's it, dude.
Yep,
that was
right
it.
There.
God damn it, 147 on the dot.
Look at that, bro. You remember last week too? I was like, look at that. It could be more perfect. It was like Apple.
We put this on there last week, correct?
No. Okay, that line, that call out you said coming down to 145-ish, that was from November 6th, the day before my birthday.
Oh, yeah. When we were still trading here. Now I remember. And we already got it once.
Yeah. But you're looking at that. That was the last resort.
Look at that buy side. That's interesting. We need to get volume.
Been a better, yeah. Tight risk. Like, oh, man, that could have been like maybe 3%.
What is it?
Let's see.
Hey, on my stream, can I go back? No.
Okay, I don't like this report. It's not giving me comparison.
Thank you.
Okay. This is what I remember Shai was focusing on as far as like how many deals over 1 million, 5 million, 10 million. So over the 10 million, they got 61 deals. I need to look at what they had before. but that was a thing.
Oh yeah, I do remember he had a formula for that. It was genius.
Yeah, because you don't need. I mean, Palantir is such a low amount of staff. It's software. The overhead here, you can't compare that to something like NVIDIA. That and the government contracts, I imagine. Here, let me read through this a little bit.
All right, so let's see. No, I don't think. Oh, they did. So they did print, and they're incredibly positive. Correct? Is that how the market is? It looks like the market is enjoying what they've produced.
Yeah, I remember because before, remember we started, it was black box, right? These things don't blast. There's too much uncertainty. So why are institutional investors going to put large sums of money into this when, it's an unknown, right? So it's U.S. commercial. When it becomes commercialized, that's the big, the iPhone moment, right? And then right now it's saying it's ripping 137%. So what I want to do right now is I'm going to look at like where it was before though. Like what was the margin of growth between that? I remember there was a pivot before, but 137%. Well, actually, let me just ask here. What's the rule of 40? No, it was at 64 about a year ago, I think, which is insane as well. Yeah, literally 127. Oh, that's insane. Oh, that's wild. Okay, let me go direct to the source then. There's nothing in this bracket. Like, here, you want me to share my screen? I can just go through it.
Yeah, hit it.
Let's see this. Share screen. Yeah. So, I was looking at this for a bit. I was like, where the hell is Palantir? I don't see it. It's all the way up there. That's wild, right? Like FICO over it. Ad desk, right? 54%. Actually, I don't even know most of these companies. Look at that. That's insane. So U.S. commercial growth, government revenue, so contracts. That makes sense too. Revenue grew 70% year over year. Now, when it was Shy, what was he looking at when it came to growth margins? He was going with, I think it was like 34%. Was what the key number he was going for? Was that quarter over quarter or year over year?
I was honestly looking for some of the notes I had from some of our streams to try and find it because I don't remember. I remember him saying it. I do remember him saying it, but I just don't remember. What was the question here? I'll just text him.
No, but it's true. There was as far as like growth margins.
Hey, when you were running that
year over year, he was looking at least 34%.
We were talking about on the stream a while back. Were you projecting out for year over year or quarter over quarter? He does do tight time. He does do quarterly because I know he stays on top of that stuff. I don't think he publishes all that, but he's like, dude, he's dialed in. He knows too much about this stuff.
Well, it would seem like Tesla. I think he dropped it down to like 18%. But as far as like the FSD, it needed to scale up to make up for that.
Tesla's one. I actually closed a little bit of the leveraged Tesla. Just because this loss here, 429, it's not ideal. We wanted to see that hold. Now we're still safe. I would say about 406. This is easy peasy, clean and clear. It's just a matter of holding a leverage product while it drops, stock drops 5% is just not ideal. So it just doesn't make sense. But Palantir is one where it does become quite interesting to use the leverage product. So this is something that I never use leverage products, to be honest. I just learned that the leverage set resets daily, or the decay resets daily. So you're incentivized to buy it and sell it quickly. So I didn't know that those products were specifically geared towards trading intraday. That's new to me. I did not know that. I just thought it was literally double the exposure. So then I was like, well, why the hell isn't it going up double when the stock's up? Like, it just never added up to me until Wolf just basically explained it to me, because I'm an idiot, that the leverage resets. I didn't know that. He had to explain it to me. But yeah, it blew my mind. You can see that I don't trade them. But yeah, and I don't see the value versus options. I think I'll take that any day of the week. Separate third-party product with fewer controls in place. It's good. But Palantir, the chart.
I think it's above 30. Actually, I can just look this up in the Discord. I know what to search. I wrote it. Control F, PLTR. Margin would be the keyword, I think. Okay, so, nope. Let's do that. %. That's crazy how many times we've covered Palantir. No, honestly, guys, on this stream, this is dated back till when? Like, when was the first time you talked? When did Palantir come out? Look at the chart. I'm on the other one. Is that 2021?
I think, yeah, I would say definitely at least yeah.
Dude, it was you covered it since, okay, it doesn't even matter the date. You covered it literally since the first day. I copy pasted it onto the trading view chart, did the replay, and took a screen record of it. Like, since day one, like, you had your eye on that. But how many different plays have we had along the way? Like, different mindsets. You have options play, taking up and how you scaled out, but also like long term. You had the retirement one at 760, but you weren't or I think it was, you were buying at $7, but you were not going to put any large chunk of change until it broke 760, and that was it. It broke 760, and it was just straight up from there, like that.
Oh yeah, it did. It was perfect
timeline. Yeah. Okay. Oh, this is way back. Holy crap. Okay. All right. AP, first $1 trillion company.
Let's get back to the chart.
Top line growth, rule score of 81, which is double his goal back then, which was February. Oh, literally a year ago. Yeah, February 4th, 2025. So they've doubled that since then, almost. And then the growth was, it was on the screen, 41%. Back then it was 26%. So they're accelerating right now. Wow.
Oh, dude, it was 2020. I just found it, October 6th of 2020. Here, you get this. Look at this shit. Boom, baby.
Oh, remind me. I got to send you that video. It has all of the alerts from all the Discord.
Yeah, we just locked and loaded. The 17.5 calls for 2021 we bought in October of 2020. Each contract was $105. Now, keep in mind, those expired 2021. So selling them, that's 78 a contract, right? So 70% return. And then if you go up to these, is where it gets nuts. So for these, where is it? Those are 2020. Oh, those weren't
in the chat, guys. Are you guys holding Palantir? I'm sure most of you guys have traded it before, but anyone holding it long term?
May 5th.
Even if it's not that low entry.
$15 call for 2025. 2 years out. 80 cents a piece.
Okay.
After we bought a bunch, right? 159, 289. That's a same contract.
That's a great question. What is the point of this analysis after hours?
It's a great contract.
What we do here is we're focusing on the long time frames. We're talking about long term. We're talking about like context long term with Palantir, a company we have high conviction in, early entry with, and the levels we haven't gotten to the levels yet, but
the one I'll find a cleaner one. Sorry, go ahead. I was showing him the trades, just blowing my mind. Back in 2020, we were doing this. Like, dude, come on.
Dude, I can just pull up the timeline. Here, you answer the question now. What was the point of the analysis after hours?
To understand what the trade is moving forward. I mean, is this a name that you don't ever want to trade again, or is this an opportunity that has proven itself? And basically what we're talking about now is they've met the goals that they expected to make, which means they're extrapolating the growth outward, right? So what does that mean for holding this stock? Is it still overvalued at this price? Is it undervalued? And what can our target be so that we can hold it for the appropriate amount of time, not forever, not any other thing than the most appropriate amount of time, because the trade made the most sense. The investment opportunity, basically, is this the best place to park my money for this amount of time if that time frame's 3 to 5 years? And I would say this is, in my head, one of the best places to park 3 to 5 year money, cut half, leave it for 10, and you should have a new house at that point if you've got 5 to 10,000 to put in. But keep in mind that was at $8, so that's the reason. It does matter when your entry and what your average is, because your cost basis is effectively the risk. That's your cost on that. Like, what did that capital cost you? So, Trey, shout out. I love that.
Yeah, hell yeah.
I just get into this. It's a lot. My first investment was Palantir. Did my research. Feels good. That a boy, Trey. That a boy. Come on now.
That's it. The winners win.
You get there. Make sure you join us in the Discord, dude. You'll love it. If you love researching if you love working as a team with other people just that you'd be friends with to research good companies, that's what we just hang out and do that all day. It's fantastic.
Yeah, all different levels too. You can be a
beginner to advanced
stock before. Yeah.
So I love that. It's just the link at the bottom.
The bottom of the screen. I'll put in it. I don't think it's.
But yeah, so Sam, that is the point of this, is that we are effectively looking at, here's everything that's happened to date. Here's where we're at in the trade, and then discussing based on the information we have now via earnings. Does it make sense to trade for the next couple earnings? And I already have that answer. And the answer is yes. So basically, we trade a very specific strategy, or at least I do, that has produced some of the biggest ROI trades, like your Robinhood at 8, Palantir at 7 or 8, whatever. We bought Google at 100. We bought Netflix at 50, like crushed it. This is the formula I use to determine what trades make sense. And then we review the chart to see if it's time. So there's two parts, right? Is this the right trade, and is it the right time? So me and Shai used to do it very well, I think. Is like he said it really well. The fundamentals tell you what to buy. The technicals tell you when. That's why him and I were a great pairing, right? So we already know this is a fundamentally good company, that it makes sense that the government's just giving the money hand over fist, and that AI is basically this fugazi bubble in which no one can really price it. So it's worth what it's worth. And they're one of the people that are naming that price because they are getting the money from the government. So what Palantir is doing is far bigger than just getting some government contracts. They are literally creating the market by which SaaS, or whatever the hell you call what they do, companies engage and interact with the U.S. government and the United States at large. I think they're basically going to use Palantir to write the book. So Palantir is going to get benefits that I don't think can be found on a balance sheet. I don't think those will be verifiable in a spreadsheet or their earnings. It's stuff that you just can't really account for, but definitely is a compound force. So there are things that you can't particularly account for, which means they can never be the thesis of the idea. But what they can be is a compound growth factor to the thesis of the idea, right? What is our thesis on Palantir? Holy shit, these guys have basically revolutionized the way we can do business and understand the data and analytics and really visibility of the pipelines of data that exist in our businesses and personal lives, et cetera. They've basically built the catch-all. The
biggest AI applications winner at the enterprise level. Yeah, first mover advantage on the second stage of AI,
which software. Means that I don't know how they're contracted
beyond whatever hardware can do.
They're getting data, are they not? What's the biggest race right now?
The data.
Right. What's the biggest race is who can get the training data. That's the only race there is. Everyone's got the same compute. So it's who can get the most quality training data. Beautiful. Who has it?
Yeah, I mean, Maverick, okay, that's what I was
Who already be having that? Who already be having that data? Who already be having that data? They already got it.
As far as contracts, man, like if you're going to compete against Palantir, who are you going to hire?
Yeah. So that's why
Palantir. There's no one that can compete with them. They're going to take it like Europe, like first mover advantage. There's no way. I don't think anyone can catch up to them at this point. I mean,
because
just
they
look at the
dominate.
revenue growth. Look at the government revenue. They're 60% in a year here. This is all
I
across
switched it to the chart.
82%, yeah. And commercial, which is massive because that was where Shy was a little bit worried. Commercial growth is important, right? Yeah.
And there it is.
Yep.
So suffice to say, we bought this at $8. I'm still holding a lot of it. However, we also identified that this area it's currently trading at 145 and change is a key level that I would be willing to add at again. Personally, I think I'm going to configure an options trade. That makes more sense right now because I'm holding so much of the stock. It doesn't make sense for me to buy a bunch more of the stock. So what does make sense is leverage options and give myself flexibility. So that way I don't have all my money tied up in one trade, but I also am not sacrificing the asymmetrical upside that exists. But only if you get the option right, which I will. And I'll share it with everyone in the community. So if you're in the Discord, you'll see it. But I will say it's not going to be cheap. Like we're not. So that's a question I get all the time. Like, hey, I want to trade these options, man, but they're too expensive. Not true. The wrong ones.
Oh, that's why I love Palantir. You can get really nice options. It's got a clean chart too.
Right.
You know, use that hourly. So, yeah, we're talking hundreds of percents. Yeah, like.
So I think that right now we just kind of look at
like this 57%.
When we retest the highs, how do we sit in the money without being in the money now? I don't think we can go below 200 because we've already hit 200. So anytime the stock hits a strike, it will always be slightly inflated if it comes down later. You don't get that extra. You don't get that little bit of extra on those. So it's not as quality as when you got some of these other names you can do that with. But I will say that as of right now on the daily, I would pay close mind. Now, again, it looks like earnings is going to kind of set them up for some success here. So I would say that the trade could, in theory, be initiated quickly. Let me actually start taking a quick peek into that. So again, I will be posting that to our community on Discord. So if you're not in there, the link is at the bottom of the stream, scrolling across the bottom. We do everything through WAP. It makes it easy for you to join. Wow, they only have a few thousand.
Talk about Zoom options here?
No.
Is that what we want, Matt?
Talking about. Let's look at this. Part of me just wants to go nuts, remember, because I already have the 200 call for 2027 that we've been trading. I don't know. Part of me wants to go 2027, like 250. Like, why not?
Ooh.
The IV is reasonable. So now, if this is an unaffordable option, you could create a spread, which again we can explain in Discord, which is to buy one strike but sell another. So you only have to pay the difference. Now they limit your upside, but they also limit your risk. So it's kind of like if you're newer, it's a much better instrument to use. And basically you can, using that strategy, you can trade that makes any option affordable. That's what we should have done the video on, is how debit spreads make trading options affordable, because they do.
Hey, I've already brought this up. This is already in the works. Yeah.
Just make the video. So
right to Bulls coaching too. Yeah.
So look, anytime we get earnings, I always want to treat that with a grain of salt. I would love to see a little bit of pain here. I would really love to see like 125, dude. Like, make it hurt. Make it hurt. I would be so satisfied with that. Because, again, some of these guys are longs that you'll never get again. So you just got to take it. Hey, what's up, Trey? We stream, me and him are on here every Monday, but we're streaming like every day in the Discord. Like, it's something's happening all the time. This live trading or like a specific coaching course or class. Like, it's a group session. It's just shit popping all the time, dude.
Yeah, like tomorrow morning, if you hop into Discord now, tomorrow morning and Thursday is free open market live trading. Thursday, the guy 2 comments up from you, Mad Maverick. Yeah, that's the one I would show up for. So get your ass in there. And you can follow the link at the bottom of the screen. The WAP.com, that PB alerts, just go for the free membership. It'll take you right to the Discord. That way it's easier for you to log up for roles and stuff. Yeah. I'm the Porterhouse in there too. You can tag me in the chat. Yeah, I mean, like it's one of those things. Like, yeah, we had the premium section, lifetime. We get products, yeah, but like in the free section, like ask whatever you want. We're here to help. Like, I know I'm not going to not help you or like hold stuff back because you're free or not. So get in there, man. It's a whole community, man. I mean, that's where I started. I started here, but like in the middle of COVID. Can you guys hear him? I can't. Dude, are you muted?
Sorry, I was muted the whole time. I was asking if that's the same Trey. Is Trey Riojas the same as Trey on X with the cute little chihuahua? Are you the same Trey? Did you just pop over to YouTube, or do we have double lunch trays going? We got 2 trays. Wow, pun intended, because it's Trey. That's genius. Lunch humor. I love lunch humor. It's always been a type that's inspired me. I don't know why. Any sort of lunch-related comedy. Yeah, he went to YouTube. Is the same guy.
Yeah. Nice.
I like this guy. Yeah, get in the Discord, Trey. I like this guy. Get this guy in the Discord. No, give this guy a month. Give this guy a month. This guy's a winner.
Okay.
He's gonna crush it. Trey, you just got yourself a free month. Congratulations.
If you got the link, just
the full not coaching, the full membership. It's $140 on me, Trey. I'm gonna pay for it myself because I believe in you, my son.
So first, oh wait, I just sent it to everyone. All right, first click that link, get into that will take you right to the Discord. I'm the porterhouse. Just DM me or like in the free lobby, whatever chat you can type in. Literally just type the @ sign and then the porterhouse and then tag me and I'll DM you.
Yeah, and look, we hooked up Trey, but I don't want to be a dick. I want to hook up everybody else. So let's do something else cool. Let's just do first month 50% off for everyone else. Bang done. Feel deal fair?
Yeah.
Can I get it in the chat? Is that fair? I know not everybody's Trey, but guys commenting. He's showing up. He's coming on multiple platforms. He just texted me basically. I don't know if he got my number, but somehow he's on it. So Trey gets the freebie, but everybody else, 50% off first month.
Come on, we got to get something.
That's on me. I feel like that's generous. Or I guess just raise your hand if you want to claim it. Otherwise, we don't even have to make the code.
Wait 10 seconds for them.
Nobody wants it. We don't have to do it. All right, forget it. Pass it.
Yeah, why not?
All right, so
just Trey.
Just Trey. Congrats, Trey. Yeah, it looks like Palantir's going to hold up here. This is quite interesting for a little position trade here, dude. With a firm stop at $10.
I think there's going to be a retest there. Yeah.
1 to 5, baby. Trade it to 200. Because it is trading against long-term resistance here. That is just a fact that is unavoidable. And until it trespasses that, it's just going to stay down. So, yeah, we do Weeble in a second. So, look, I'll just throw this out here from the equity standpoint. I'm going to craft an options trade for this, which will be posted in the Discord once again. So, get in there. Just join, and you'll see it in my channel, Big Quench Trades. So, I would say, though, now we'll throw this equity out there for those that aren't in. I like it here. So buying between 150, 155 with a hard stop below 144. That's called a position trade, meaning I'm buying the whole position at one time with a hard cutoff and a hard take profit. So in this example, if my hard cutoff for stop loss is 143 and change, then my profit would need to be at least 3 times that. So if I'm losing 10, I need to make at least 30 on the upside. So that means that this stock would need to go to 185 for it to meet our risk reward standards. That is below current resistance that it will test. So in just testing the resistance, we can capture that trade all the way up to where it becomes risky. Because when it gets risky is when it tests resistance. Yes, it might break out. Awesome. So if you're already in the trade and it breaks out, what do you think happens to your position? If you bought it down here, and let's say you bought some here, bought some more here, bought some here. Now when it goes to test resistance, before it even hits resistance, it's already hit your target. So you put your target in the path of where it was already going. That's called genius. Path of least resistance. If you can do this, you are genius. Because you've found the one way to make the most money while also sitting on your ass the most. Meaning you're not getting up and doing a bunch of stuff to make it happen. You're simply betting on the outcome because you're already reading the tape of where the outcome's headed. The difference is most people get caught up on the final outcomes of like Palantir will go to 800. Maybe. Why does that matter to me right now? It doesn't. Doesn't matter at all. So we don't have to worry about the what if. We just have to work with what will be. We already know where it's going to test. We already know how the price is going to react. So because we have that information, we have a huge edge. Their edge is you not having the information. I don't know if that's ever been said to you out loud, but Wall Street's edge is singular in that up to this point, right? Technology's changed it a little, but for the most part, Wall Street's edge is you not having one. It's you not having the information. That's it. So if it's not a skill problem, meaning you just never got the information from a qualifiable source, sounds like you could do this professionally. Huh. If you can do this professionally, it sounds like you can kind of make what you want to a degree, right? But I'll tell you right now, if I had $10,000 a month, I could produce $10,000 easy peasy. If that was my job, to use a $10,000 account to produce $10,000 a month in income.
Yeah.
Yes,
Yeah.
I'm saying double that account in 1 month. I could,
Yeah.
if that was my full-time job. It's not. So I'm not going to do that.
And it's hard to try to find different, I don't know, to adjust. Right? Like, how many times have you had to adjust? But also, you had to adjust at different account sizes, right? Like, I feel like you got to reteach yourself some things sometimes. Like, you got to change certain impulses and predispositions to act a certain way, right?
Well, yeah. The trade. So, like, an investment in 2022 is not an investment in 2025. It's just
yeah, of course that. Yeah, all different.
So,
market.
like, when we're talking about back then, right? Like, this was a much different trade at $8 than it is at $150. But what's really changed? The only thing that's changed is we saw it first, and then the market corrected itself. And we just were sitting in a position to get all the benefit from the market doing all the work of correcting itself. That's all we're trying to accomplish here is how do I sit in the right chair? So that way I win. I get picked, whatever it is. Let the market do the work. Just be in the right position. You don't have to do anything. Like once you find the idea and you click that button for the trade, your work has concluded. And people say, well, what we got to do the targets. If you're doing that now, you already fucked up. Again, before I enter a trade, I know exactly where I think it's going, exactly how much risk I'm going to take, and exactly how I'm going to trade it and why.
It's mapped out beforehand. Yeah.
So that's what I share, right, within the community is that whole research blueprint of this is how I trade this name, whatever, so that you understand, like we're teaching you how to fish while we're feeding you. That's the point, is you can't starve while you learn. You just can't. So basically, that trade and the things I needed to do on this trade at $8 are very different than the trade and what I need to do when it's at $150, because there isn't as much for the market to correct anymore. We already got that. It was from 8 to 150. That was it. Now it's a matter of Palantir building the future in a believable way so that we can be confident enough to buy it again here with the expectation like, oh, the market's going to correct itself again and we're going to go to 250. Be sitting in the position to just let the market be the wave that carries you wherever you want to go.
Like so, Michael Anthony, I see you talking Palantir could drop under 100. Yeah, it could drop back down to 8 too. I mean, there's what it could do. Yeah, but like we already have our plan in place of what's going to happen if it drops below that point. We have our thesis, but the levels are all we need.
Yeah, there would have to be like some sort of mass scale fraud, something damning for this to go to 100. I mean, but also to the point, Michael, like I think that you bring up a good point that like this is why when you get in and being positioned well matters. Because right now, again, my cost basis is like $8 or $9. So if it drops from 150 to 100, not ideal, but I'm not sweating. I'm just not. Now, if I bought at 150 and it drops to 100, I'm sweating. And then in 3 years, it'll go back to 150. And then I'm even. And I waited. And my money, basically, I loaned somebody money for 3 years at negative interest. I actually paid. And when you think about it, if you're sitting in a position for 3 years at a 50% loss and then you eventually sell, you basically loaned somebody else money at 50% interest that you paid to them. You paid somebody 50% of the principal to hold your money for free. I know that's reductive, but it's true. Don't do that. Don't ever give anyone money for free unless it's someone you love and care about and you're doing it out of the kindness of your heart. Then absolutely do it. But you don't do that with your investment decisions, right? It's all about the filter you're applying. In my life, as just Austin, I'll give and give and give and give and give. Why? Because I struggled with addiction for 10 fucking years and not that many people helped me. So I help people now to help me back then. Doesn't make sense, but it works. But I'm also not handing them $500. You know what I'm saying? I'm not handing them money. I'm not doing anything insane. I'm just meeting them where they're at as a person. Those are two different things. I can't apply that philosophy to investments or I'd be broke. Because I want to help everyone. I want to believe everything can work out. I want to believe all people tell the truth. I do want to believe that all people care about other people, but they don't. And that's okay. It's not how I roll, but whatever. We have to look at it in the truth it's representing itself, right? Like it's showing you what it is. You don't have any decision to make other than yes or no. Your thoughts on if it's a good company or not, irrelevant. Is it a good trade?
Well, other people say.
And to take that one step back, for those that are going to join the Discord, you're going to see this. So let me just give you a little preempt. Our whole thing is you explain how your life is. Like, oh, I got kids and I do this and I play, pickleball on Wednesdays and I really only have 3 hours that I can donate to investing to myself, right? So we build a trading plan and an entire philosophy, that framework. We help you build it that works within that parameters of I have 3 hours a week. Not, hey guys, you're going to start spending 50 hours a week. No, bullshit. It's, oh, that's where you're at in your life. Let's fit this in a way that makes sense, much like exercise. Going from, as someone who's been absolutely fat as fuck. I mean, I was like 320, I think, at my height. I'm at 240 now, 238. So I've lost almost 100 pounds.
Yeah.
I used to always do this thing where I would it's called fantastical thinking. I'll change everything all. I'd be like really motivated in a moment.
Oh, so me too.
I go all in. Thorough plan of I'm signing up at this gym. I'm scheduling Mondays, Wednesdays, Thursdays. I'm going to be there for 3 hours and then I'm going to get this trainer. Then I'm going to go play AAA baseball. And then I'm going to do what the fuck are you talking about, dude? What? It's a thing we do to feel good, get the dopamine, and believe that we might do something. So basically your brain is serving you enough to get off it. Your brain's saying enough already and just serves you up a fantasy. If you're someone that couldn't, me, right? At that point, I was someone who did not exercise once per week, really at all. So tell me, all of a sudden I expect to just jump into a fitness routine a guy with a six-pack is doing? I don't think so, man. So what did I do? Just made sure I made it twice a week. A little bit of half-ass, a little bit of workout, and then eventually it was full workouts 3 times a week, no problem. But because I went from once a week to twice a week to 3 times a week, point is, you're not going to change your trading overnight. You're not going to make a life-changing sum of money that's going to make everything go away. Money is not the answer to your problems. The market doesn't care about you and never will. But I care about you. I know he does. We'll help you navigate it. The market's not going to give a shit about any of us. But what it will do is it'll continue to pay us because it's quite predictable. You can't. Anyone says I'm going to predict to the dollar, that's stupid. Predicting direction is very easy. Very, very, very easy. We do it every week. If you guys have been following this, these trades have hit for 2 years in a row, every single week. So to kind of sum up all that with why you care about Palantir, why would you even talk about it now? When is too late? When is too early? Some of Michael's points about, it could go to under 100. Talked about a few things. That timing is very important. When you get in does define how you interact with that stock from that point forward. Meaning, if you get in very early and you've taken your profit and your cost on capital is almost nothing, sitting and holding through suffering in the market, blood red, bleeding days, won't bother you nearly as much because you've already calculated your profit. You've already taken it, right?
You've already taken it. Yes.
Exactly. And then secondarily, anything you're working with is house money.
Like at 373 average, there's like 87 right now. It went up to what, $100? Now it's down to 87. For some people, that's a huge difference. For me, I'm still up a few thousand%, and I'm only holding like a very small percentage of what the original investment was. So it's not a big deal, right? It changes. There's variables at play here.
So I'm just going to ask a general question. I'd love to see your guys' answers in the chat. Do you find it more fun to take risks, big risks with your money? Or do you find it more fun to take big risks with other people's money?
My money.
So basically, if you're at a casino, it's your money, it's the house's money. Which one do you want to take the risk with? Your money or the house's money? I would just love to see that in the chat.
My money. For me. I don't know. I don't know. I don't even know what people would answer with. But for me, it would be my money.
Why is that?
Oh, there's danger.
In what?
Without the danger, there's no thrill.
But it's money is money, right? Whose money it is, does it matter?
I mean,
fundamentally, does it change anything about the risk? No. So I would just ask this. Here's what we're on
compared to a woman as well.
Table on that one is number one, take the least amount of risk with my own money. Right? Because it's mine. That money cost me more than anybody else's money, most likely, right? Because you slaved away for hours and hours and hours at a job for a rate that's probably below what you're worth, right? To get a shitty thank you and a $25 Arby's gift card at the end of the year, right? Like a lot of people have lived in that situation. That's a real life story from my own experience, right? So basically,
pizza party.
That money costs you a ton, and you're going to take more risk with it. I'm not saying don't take risks with my own money because I do. But the question was, if you're sitting there with the house's money, that's the one I take risks with. So when we're in Palantir at $8, just to tie this all up with a bow, when I get into one of these stocks that goes absolutely nuclear at $7, $8 down here, and then it explodes to $189, by the time it hits $40, I'm playing with only house money. Doesn't mean I sold the position, but what it does mean is I have structured stop losses in places at all these levels for the actual equity position, so I'm never off sides. Then I take a small chunk that I pay attention to, that is the house's money, and I let it ride. It disappears. It 10x's. Somebody else's money made me 10 times on my money. That is the best deal I will ever get, and I paid nothing for it. So again, to look at this all through the frame of like borrowing and lending money and then interest rates. Let's just look at it that way. Your money is parked somewhere. That's all money is an energetic focus towards an object, thing, instrument, asset, whatever that we all collectively agree is worth a certain amount. So the key here is in understanding how much of my money am I putting at risk, how quickly can I get the house money, and then how much risk am I going to take with that house money. Because the more house money you have, the more risk you can take also with your own money. Because the more capital you have, the lower the risk needed for the bigger return. So if I have 1,000 and I want to get to 10,000, I have to 10x that money. If I have 100K and I want to produce 10,000 in income, I just need to produce 10%. Shit, Ben's doing that every month already, pretty much passive income. So it's all about that total net sum and how do I take the least amount of risk possible to get the biggest return? At first, you have to take the biggest risk to get the smallest returns until you grow your account. Risk declines as your reward increases. EV bet. Like on the trade scene, like on the EV stocks. See, now this is what I like. When you get a 10 bagger like we did with the Jamia, you roll that into another underpriced, high risk but high reward name that you can also get a 10x on. Why? Now I wouldn't roll it all in. Like personally, if I get a 10 bagger, I'll take 20% of that house money and throw it into a lotto ticket, 10% maybe, right? Because again, it's house money. So if I have a really good feeling, it's not take risk to take it. It's I have a really good feeling, but this is a lot of risk. But I couldn't agree more. So before we do a quick smash or pass, I do want to dive into this screener for a minute because it did populate some interesting stuff. So I'm going to pull this up here. Let's see. Dude, God, shoot me on UNG. I sold it and the natural gas just went insane. God, I was way too early. You know what I realized? I've never been wrong. I've only ever been early.
Okay. All right. Quelch that.
It's not a literal statement. It's saying it's a truth. It's a truth for all of us. You can never be wrong if you've done the due diligence. You can only be early. Because the due diligence, the fundamental research is the research. It's fact checked. They have to file it with certain agencies. You can put a high degree of trust in it. I'm not saying you can trust the government, but I'm saying is there are processes in place where most people are going to consider it credible. And ChatGPT can analyze fundamentals now. You don't need that. You don't need to know it anymore. So that's my point. The only thing that can't be done anymore is timing. That's the only thing that can't be like automated. It's just, it can't be. So the timing is your edge, and that's what we're telling here is worst case scenario.
Man, I don't know. This looks like a good short right here, to be honest. Back down to 450.
I don't love Jimmy here. I'm not adding this now. We got this at what, $2-3 the first time, and then it went down to $1 something the second time, and then went back to 15. So this was a 10 bagger twice. So I have no interest in messing with this now. But Schrodinger is one that I've been asked about a lot. This one's getting beaten to shit. Remember, this is probably one of the higher risk ones that we can look at right now. Biotech plus AI, it's like as bad as you could possibly want it to be.
1650 break.
But there's nobody like them. That's the difficulty. There aren't comps to peg it against, but also they're basically
community chart capitulation before you get that little bottom, and that's the play I can see. The early entry is what you did on Unity. You just wait for the higher low, retest that base, take it up. Right down at the bottom of there. Yeah, when it broke below 20.
What an ad right there, and bang to 48. Same thing with like Rocket Lab, dude. It's insane. That one's just still going, dude.
Oh my God!
They're like $4. That one's almost a 200x. I realized. Michael, I would say hit the Discord. We've got tons of write-ups on Jamia, tons of content in there. If you just search Jamia in the chat, you'll see basically all
just go to the Big Quench Trades channel. It's in the free section. Just hit Control F if you're on a computer. Just go to the top search. Just put JMIA, and that's it. Like you'll find all the posts going all the way back. You'll find the blog too about it too.
Yeah. And so on that quick question of Palantir is still overvalued, of course, but also you're pricing in a future that no one even
value at this point.
Yeah, but no one even knows that. Like, there's no system. Like that's where the SaaS company, they broke the model because there is no system anymore. We've all agreed long enough that these valuations are acceptable, so they just are now. It doesn't make it sensible, but also keep in mind, what has the dollar done over the last 15 years?
Where's all money flowing to? The US?
It's a 1/10. It's probably 10% of the purchasing value it had. So that puts their PE truthfully at about 1/10 of what it's representing, in my opinion. If we're looking at dollars for dollars, that's crazy. I think
long term, that's where I'm worried. Like for me, I don't really feel confident.
No one's accounting for the currency debasement. That's the one variable that people are not accounting for in this stuff.
And I don't think I would feel comfortable getting in anything long-term right here unless I was already holding it long-term for a year. What about you? I mean, there's one that happened. I don't know. I've never seen that happen before. But we did. But with this chart, like Jumia, we've seen that currency debasement. Like that was a big issue. That's why they and investors are worried about what happened earlier. We're just pumping them. And that's where we got the capitulation. But it wasn't.
Yeah, because like, dude, if you follow M2, right, money supply, like if it grows, say, 10% a year, or let's say 5% low, but the company revenue grows 4%, that's a loss. But it doesn't look that way.
The currency was like 50%, I think, at one point, or 25%. Like that's massive. It's huge. But and then they just build a big ass cash position. Wait it out. I mean, for me, like I don't know how to think about this when it comes to America right now with the way currency and assets are rolling. I mean, there's a lot of variables at play, of course, but I mean, not of course, there are, and it's chaotic. Like, how are you thinking about this long term? Is this a place where you're going to be investing long term now, or are you going to be focusing more short term and things that are completely outside the spectrum of what's affected by that?
You're saying to me?
Yeah. Or anyone.
I would say that all alternative investments or something I've been doing the last year, like which are not as accessible, unfortunately, but this is what it is. So we're working towards is creating the access for those to the general public, which typically doesn't exist. But basically, I've been shifting into some of those. Obviously, everyone in the Discord knows the positions I'm holding that we're crushing, all the Teslas, NVIDIAs, Palantir, all those, Snowflake, all those ones we cleaned up on. I still trade a decent amount of small cap stuff still. Why wouldn't I? It's where you can make, in my opinion, the most money, most predictably. But that's just me. And I would say that, one I wanted to do. I'm so glad we got this opportunity. I haven't done it because I've been waiting.
On here, didn't
I've just been suffering along, waiting until finally it is time. It is time. It is time.
It? Oh wait, I haven't looked at this.
It is time. It is time. So these guys are good friends of mine, clients of mine.
Okay.
Fundamentally driven small cap oil. American-based, right out of Denver, couldn't beat it as rising costs continue to hit. What are the energy companies going to have to buy to run those backup Jennies, baby? Good old American oil. And I think they're in a great position to capitalize on not only that, but probably end up folding them into a larger corporation. But the CEO, Ed, is an absolute genius, brilliant guy. He's done the math. He's a very Jeff Bezos-esque figure. He definitely has like a logistics vibe to him. Like he's done some sort of calculations that you couldn't even understand. And he knows exactly how this is going to pan out. I swear to God, you meet him. It's like Rain Man. It's fantastic. And he's the sweetest guy too. Brilliant guy. He's built an exceptional team. I love almost everyone I've met there. But this is a small cap name that all day, baby, right now. We got 155. We got the hard cutoff. We can run this all day now.
Higher low technically right now. Yeah.
So what I need to see here is this, exactly what he just said. We do not want to see that high trespass this one. That would be no good. What we want to see is not a clear boom up. That's no good. We don't want that. We want to see a little testy test, a little consolidate, maybe another touch. Then we'll start building. And my long-term target here is going to be 8+. That's like 3 to 5 years out. I think 8 is a realistic. But then we're bringing in this whole money supply thing.
Everything's accelerated nowadays.
Now it's changing everything for me. It's like the same models you used before you can't use, but nevertheless,
it's shrunk up. It's like Powell during a Powell speech. It's the same thing, man.
Well, we're going to aim for probably 4. We're going to aim for 4, and we'll probably get 8, but we'll lower the risk just to account for that. But that's still, guys, that puts us, we're trading at about $1.80 now. That puts us at like a 2 to 3x on this one. Again, this is one of the partners I sought out for a long time. I wanted to work with them. I wanted to go into their books, understand everything they're doing, make sure it's real before we put our hard-earned money into it. And I'm very proud to say that they're one of the best companies I've met as far as giving enough of a shit and respecting retail for what we are, that we are a much larger part of the picture than we ever were, and one to be respected. And they do respect that and understand it. And so they're working on a couple really interesting things that are basically dividend paying instruments that have never been available, to my knowledge, to retail. It's only because I push the idea super hard that it's even happening, or they're willing to explore it. So that's pretty cool. So I'm hoping that by June I come out of this with a deal like that where we will have a preferred instrument.
That'd be cool.
That is retail first, because the banks are the ones that get these. It's never us. It's always the banks. And then the banks fuck around with the stock, the regular stock, the common stock, in order to benefit themselves on the preferred side. It's insane. So their thesis lines up with ours in that, like, what if you just cut out all the bad actors? In theory, we as retail are getting 0 right now. Let's say the bank's getting 8% on whatever it is. Let's say retail is willing to take 4. Guys, we're getting 0. Now, what if we get 4%? We just cut them out. The company saved a ton of money and now can go back into the actual business. All we're doing is cutting off the banking teat, which is just an extractor. There's not value add there anymore, because the services they used to provide are all digitized now. Like, what do you really need to do? It's relationships. But the bankers aren't the only ones that have them anymore. So, also transparently, I just feel like one day I'm going to go get my money and they're like, nah. So it just scares the shit out of me. My uncle's been telling me that since I was 10. Dude's crazy. My Uncle Mark, he's predicted like almost all of this. Like, dude, you would have said so much shit about him 10 years ago. You would have conspiracy, like whatever you want to call it. He said it and you would have wrote him off in a second. Dude.
No, I probably would have loved it.
My God, how correct he has been. Dude, how correct. I mean, look at guys like Alex Jones, like you guys like that. Like, oh my God, they were right the whole time.
That was a big ass jump you just made right there. Let's rattle that back.
I'm saying my uncle falls the same camp, like the deep conspiracies, the deep state. That's his thing. Loves that stuff. He's a Freemason. He's into all that. That's his game. So like, that's what I'm saying, is it's crazy to me that, anyone hasn't, like, I get why they haven't, is because the people that could do it are going to cut themselves out in the process. We as retail, all we've needed is a publicly traded company that understood the value of retail and sees the future, right? Because 10 years from now, if you don't have retail, you're gone, cooked.
Do you think?
Yes. Look at Tesla. Dude, that stock does not hold up without that fan base.
Yeah.
The Elon evangelists are the reason it's at 400 plus. We'd be trading at 250 and we'd all be happy, because it would have went from 10 to 50 and then to 30 and then to 60, then to 40, then to 80, then maybe back down low, then 100, right? Not boom. Retail was that compound factor, the escalation condition.
They're also that exit liquidity too.
They can be. So that's how we have all been used up until the last couple of years, where we now are at the front of the line and we don't have to come in at the end and buy a bunch of somebody's garbage. So, I know we did a smash and pass, but I'm glad we got this one. This one's a smash for me. I'm finally ready. To build the position. I loved it when we were up here. And once we lost, right here. Once we lost that really, it's right here. I hated that wick. Once we lost $8, so that's why I think we're going to head back Oh, okay. We'll wrap up with this. This is a great point, Michael. So here's the reality now. I said this in 2021. Feel free to go fact check it. Tech is the new value.
Yeah.
I didn't fully understand why I was saying it, because I didn't fully understand what was happening with the money supply. I just saw enough to say, holy shit, this is where value is. I just didn't understand the other piece, which is why that's where the value is. And it's, I don't know if you call it sad as much as like disappointing that we've arrived here. But basically at this point, if you compare side by side these companies with consideration of money supply injection, so inflation, the hard asset companies are going to lose. even with stronger growth rates. Because they're always going to be based on things of the old world, right? Like we're not talking about the gold standard anymore, are we? We're not looking at dollars and going, it's worth this much gold, are we? So all the companies that are on the back end of that don't have digital universe of product, are analog only, are going to be subject to that currency in total, which is unfortunate. It's really unfortunate, man. I think this is super interesting. I'm definitely going to have to explore this more because I was running a model to try and build some of this, but like who loses during debasement? Bonds, retail, they can't really raise prices. Super cash heavy tech, commercial, right? Or regional bank. That's going to be another one. Who's going to win? Who wins? Does anybody know?
What's the game?
Who's number one winner in debasement? We're looking at it.
Government?
Oil and gas.
Oh, okay. Real value.
And guess what else? Like this is the part that's mind blowing is fucking mining, dude. It's insane.
Because that's the that's the real value, right?
Because oil price, for example, and metals, commodities prices, they don't sit here while the dollar goes here. They go with it.
Yeah.
So oil and gas I think it is a function of a debasement hedge. Can't print more oil, can you?
Oh.
And think about that too. What's going to happen to their costs? They're just going to continue to skyrocket. So again, that limits the amount of entrance into the market then too. Everything about it points towards winning. So this is one I'm finally ready. I'm going in. It's game time. Let's go.
Yeah, that's why I'm at KMI. They own the pipelines.
They own
LNG.
It's a brilliant company. We've done a ton of research. Again, we work closely hand in hand with them. They're one of my favorite clients. We have dove into every single element of their business. We've seen the sites. I met the entire team. We've spoken for hours and hours. So if you want to read that research, it's in the Discord. It's thorough. Definitely read it because we put a lot of time into it. That'll explain everything that we like about it. So you don't have to take my word for it. Just read it, research for yourself, and make it an informed buying decision for your own well-being. PDYN. What the hell is this? Paladine.
Yeah.
I liked it until I saw that.
Yeah.
It tells me that buyers shot their load way too early and did not have the steam to push that further. So everyone was looking for parabolics. So now we're going to probably go back down and re-explore 2 to 5 before we do anything else. Yeah, it's weirdly gapping down and stuff. Yeah, I know. I would say over 1062, this is a breakout trade for sure. But other than that, I would say hard pass. PDNY. Oh, that's not one. So that's a different one. PDYN. Yeah, I'm not gonna be about that life right now. This is not loving it. I loved it here. This is nice consolidation. This like $1.50 to $2 or give or take. That's a nice little channel. But I don't want to buy in the distribution up. I want to get the benefit of buying below it. Does that make sense? If I miss the distribution up, that was like the easy money, then I just move on to the next one. There's always an easy money distribution up opportunity. The key is to continue to look even after it's frustrating. That's where everyone quits. They look once, they lose once, they quit. No, don't do that.
This could be like a trading to range sort of deal. I feel like that's what could likely happen here, especially if it holds up over 6 or 8. Is that? Yeah, or yeah, 6, like 7. Yeah, that line right there. Yeah.
I think it's got to be over. Like until it's over this, until it's over this, I'm not playing. Now, maybe we go back here.
Yeah.
Something to talk about. Like this could be a buy at 4, but even then, I would say probably not.
Yeah, no. 4 buy over 8.
Here's hold on. Here's just let's just see. Yeah, there you go. There's your whole picture right there. Had the chance. Still has the chance. That's the inflection point. So if it does hit that, I mean, it could go boom, boom. And if it does, then I'd say it's going to 12 and then probably 20 if it hits. But this is not one I'm buying right now. Let's move on to that's a pass for me. But there's the chart for anybody that wanted it. The bane of my existence. Why? I wish I could tell you. I wish I could tell you what they're doing with their business.
What the hell, man?
I have this range is perfect. It's priced fairly. They should have consolidated above 7. That's realism. So hold on now. That means that there is a chance that this is getting pushed to distribution down for acquisition of large chunks. So that's a good problem to have because we can also buy down here. The key is, though, if we're wrong, we're just buying the falling knife and it's not very fun. So for this one, I would say that if you did not get stopped out, then we have it right here from, what was it, 750 something? 15% down for 46% up, so 3-1. So we're willing to take 15% in downside risk to capture 46% in upside risk. So, yeah, on 211 shares. Is that what you have of this?
No, it's not. I might have omitted it on purpose, but we'll see. Did I just say that? I didn't say. Bold. No, I had it tighter because we talked 2 different things. Let's see what I put here.
And keep in mind, guys, this is one that it's increasingly leaning towards long-term Hail Mary options. If this chart continues, I'm just going to de-risk. So if I was willing to put 10 grand in total, I'm going to cut that down to 2, and I'm just going to throw it all into options. So basically, saving that 8 grand, putting that 2 grand as if it's a lotto ticket because it could pay me 100x. Yeah.
That's like, and then like Lee's strategy in the Discord he's got his own for this too. Like you look at we just went at least through 4 different charts at the capitulation where it's going past these all-time lows, right? There's ways you can snag these bottoms. Lee's obviously very famous for this. Tammy, she's a legend in that group. But options it's another way too because you're taking what your total cost would be and you're putting it to a fraction, for a leap. Set and forget. If it hits, it's crazy. If not, you're losing a small percentage. This one. Oh man, we covered this before though too, but not in a while. Let's see.
Yes.
Was it MCK? MCK.
This one's quite interesting right now.
Oh, we passed that back in 2024.
I don't know if it pays a dividend, but this is one I would just quite simply look at as a long-term be a long-term account, just wanting exposure to overall medical and big corp medical.
Oh man, if you put the EMAs on there, it's the 21 and 55. It's following on the weekly like a champ.
Is there Stryker also does something similar to Hessen, right?
What's Stryker? We covered that before.
STRYKER Stryker. Because it's weird. I'm having like a flashback to remember all those names that would be affiliated with the masks back in the day, and if they're going to make masks, they went 100x.
Well, that's why I'm in MSA.
But I'm seeing the similar thing too with these big name like medical medical supplies companies, and there's a few on this screener. So I'm wondering if there's
this one's got some increasing volume on the weekly too. Upside. We're looking at like 370 to maybe 420.
Well, with a name like this, dude, you can go crazy because you got all this time data.
The Keeson looks better in my opinion. Nah, I don't know. Being biased by the current candle. But there's a gap there. Well, 847, 894. Yeah, I don't know. What's the thesis with this? Is it a long-term one? Who's giving this?
I'm just looking at it because it came up on this screener that I'm working on, and it's a great kind of mid to long swing EMA crossover strategy that this one just popped up as. And I'm seeing a bunch of other like Train Technologies, Striker. So for some reason, a lot of these kind of medical adjacent medical supply companies are all popping up, which is a general trend, which then leads me to wonder why. Okay.
Oh, you're there. Okay, I thought my computer froze again. So I'm still.
You know what's crazy, dude? My swings setup screener, if you took every trade and you held them for 20 days, you'd be negative 16%. But when you add in one more month, the return over 48 days goes to like 16%. So 8% a month. Those are almost all small caps. It's mind blowing.
Yeah, small caps especially.
Let's see. Let me just check this for one last pass. If we got anything interesting. Ooh, this is one that I know can go crazy. There's definitely something going on, like med tech. Everybody's going wild. Why? No, they just reverse split, so never mind. Take it back. I'm not liking that. Okay. And I got this one that if you look at it in 2-day increments, this thing crushes. God, this thing crushes, dude. All right, let me see. There's nothing there. Oh, now here we go. Let's see. Oh, I've got a really good idea. Hold on a second. Mm-hmm.
Was this PAVM?
Okay. Oh, here's the mic. Hey, it was RT and current fuck is that? All right. Nice. We got Cloud analyzing these now. Ooh. Oh, dude. Do not tell me that the only missing thing has been plugging this into Claude. You have got to be kidding me. That can bring in the contextual element that's always missing. Yes. All I needed to do is find the trades and then it'll sort from there. My God, yes. Holy shit, this is going to be good. Oh, my Lord. This is going to make us some money. Look at that consolidation. Oh, my God. This is glorious. Let's see this on a monthly. Ooh. Dude, we are going to make so much money if this continues to work. My God. Amazing. So I'm going to wait for the breakout over 39, and then this one's top of the list. Breakout over 39. 04. Oh, let's see. Ooh. Oh my God. How do you go adjacent oil? You buy the people that sell it. Oh my God. This is so smart. This is genius. This is fucking genius. Oh my God. Yes. Oh my.
Okay, there I am.
Look at that, dude. Gas station was the best investment of the last 10 years. Who the hell would have thought that?
And Murphy.
Yeah.
I don't know if I heard this one.
This is a nice little channel we got here cooking. Critical, but cooking. All right, that's only two I'm going to do. This is interesting. This covers our debasement idea with these two names right there with macro tailwinds. I've never been able to plug them together. Now they can be. This is amazing.
So was it Musa and Pav M?
ALGM. That's gets some AI semiconductor play, and it's risk reward calculated. It's probably one of the better if you have no exposure. And then Murphy would be really our debasement hedge to capture on basically bottom dollar of tobacco, oil, everything's at bottom dollar there, right? So the stores, as the oil continues to increase, will be trading in the commodity that doesn't get beat, basically.
All right. Yep.
Yeah, this is fantastic. And also, any of the names on this list, Porter, which I'll share with you privately, have a very fundamental technical element that's like, this thing doesn't ever mean, like, it's just so rare that this signal doesn't precede a strong move. It'd be more unlikely that it doesn't move than it does, if that makes sense.
And on that note, Brackle, I think it's time for me to go to bed.
I think so.
Well, guys, thank you so much for tonight. We'll have the notes up in the Discord this week. And, yeah, I'll catch you on the flip side.
Love y'all. Stay blessed now. Ta-ta. Join the Discord so you can get these. We're going to post these in there.